Good morning and welcome to the Killik & Co market update. Trade tariffs have been back in the news this week following an increasing war of words between the US and China. The latest concerns came on Monday following the US announcement it will be looking to impose up to $200 billion worth of tariffs on Chinese imports if the Chinese continue their plan to impose tariffs on $50 billion worth of imports into China. This in itself was in response to tariffs proposed by the US on up to $50 billion worth of Chinese imports, mainly focused on raw materials such as steel and aluminium. Looking at the chart for the S&P, it appears markets reacted negatively to this news, but the overall impact has been limited so far, with the S&P trading in a relatively tight range of around 1% for the week, suggesting the likelihood of an all-out trade war is small at this stage. GE was founded in 1889 and was included in the original Dow Index in 1896. Over the years, its range of businesses spanned gas and electric, aircraft engines, broadcasting, consumer finance, and seemingly everything else in between. Its market cap grew to over $500 billion in the year 2000, before falling to just over $100 billion today. This decline can be explained by a number of factors, including changing end markets, stronger international competition, and untimely M&A. The end result has seen the share price decline from over $30 about 18 months ago to just over $13 today, and serves as a useful example to investors that bigger is not necessarily better. Leaders of yesterday are not guaranteed to be winners of tomorrow. And at Killik & Co we continue to look at companies that play to long-term secular themes rather than industrial conglomerates, which are more geared to the global economic cycle. Finally, on Thursday, the Bank of England's MPC voted to keep rates unchanged at 0.5%. However, there was a new member voting for a rate rise, and that was Andy Haldane, the bank's chief economist, citing better economic data in the last few weeks. This increasingly hawkish tone sent expectations for an August rate rise higher, with 68% of market economists expecting a rise at the next meeting, up from 47% before the latest minutes were announced. This pushed sterling higher against the dollar, swinging from lows of 131 before the minutes to around 133 this morning. Looking forward to the week ahead, it's another relatively quiet week in the markets as the second half comes to a close and reporting season sets to start in earnest a couple of weeks into July. However, Nike, Accenture and Walgreens Boots Alliance are all set to announce quarterly figures on Thursday. In particular, we'll be looking to see if Nike's new product range and increased direct-to-consumer sales have boosted the top line and profit margins. Thanks very much for watching. Have a great weekend.